Viral screens claiming massive Dinar and Dong revaluations. What's really going on? In recent days, social media platforms have erupted with posts showing alleged screenshots of bank screens, reportedly from Chase and Wells Fargo, displaying the Iraqi dinar valued at $5.20 USD and the Vietnamese Dong at $3.94 USD. These numbers, if true, would represent one of the most extraordinary financial events in modern history. Thousands of currency holders across the world are asking the same urgent question: could this actually be real? To answer that, we need to take a careful, rational look at the situation. This article will dissect the viral claims, review the economic realities behind Iraq and Vietnam's currencies, and explain why such sudden revaluation scenarios are almost certainly not genuine. Currency speculation can stir both excitement and anxiety, but clarity requires grounding in facts, not hype. Let's break down what these claims would mean, why they are extremely improbable, and what investors should really focus on. 1. The viral screenshots, a sensation without substance. The images circulating online appear to show U.S. bank exchange rate screens listing the Iraqi dinar at 5.2 per USD and the Vietnamese Dong at 3.94 per USD. For perspective, that would mean one dinar or one dong is worth multiple US dollars, an astronomical shift from current values. At the moment, the Iraqi dinar trades around 400 dinar per US dollar, meaning that one dinar is worth less than 1/10 of a cent. The Vietnamese Dong is roughly 24,00025,000 per dollar, so one dong equals less than 1/100th of a cent. For the dinar to leap from fractions of a cent to $5.20 would mean an appreciation of more than 500,000%. For the dong to hit $3.94, the increase would be even more staggering. Such a transformation would rewrite global financial history overnight. And yet, no credible financial outlet, regulatory body, or central bank has confirmed these rates. The screenshots lack any official validation. Given the immense implications, if this were true, every major financial news outlet, Bloomberg, Reuters, CNBC, would be wall-to-wall with breaking coverage. The silence from credible sources is a red flag in itself. 2. How bank exchange rates actually work. To understand why these viral screenshots don't make sense, it's crucial to know how banks like Chase and Wells Fargo handle currency rates. Major financial institutions do not display speculative or unverified exchange rates to the public. Their currency boards and online platforms are regulated, standardized, and subject to internal compliance checks. When banks post rates, those figures are derived from real-time market feeds and official data sources. Any error or deviation would instantly trigger alarms within their compliance systems. Exchange rate displays are tightly managed. They are not editable by tellers or easily manipulated. If a Chase or Wells Fargo terminal suddenly displayed an international currency at a 500,000% premium, the event would immediately attract regulatory scrutiny from agencies like the Federal Reserve, Office of the Controller of the Currency, OCC, or FINRA. These systems are audited for accuracy and cannot accidentally post fantasy numbers. Therefore, when viral screenshots appear showing wildly inflated exchange rates, it is almost certain they are fabricated, digitally altered, or misunderstood. 3. Economic reality. Why the Iraqi dinar isn't suddenly worth $5. To imagine the dinar suddenly worth $5, one would have to assume Iraq executed a massive currency redenomination, removing zeros and reissuing new notes. Some countries have done this after hyperinflation. For example, Turkey redenominated in 2005 by removing 6 zeros from its lira. But in Iraq's case, no such policy has been announced or even hinted at by the Central Bank of Iraq, CBI. The CBI's stated policy focuses on maintaining price stability, supporting the dinar's gradual strength, and ensuring a controlled exchange environment. Iraq's economy, while improving, remains dependent on oil exports and government spending. Foreign reserves are growing, inflation is moderate, and reforms are underway, but these are steps toward gradual improvement, not radical overnight transformation. For the dinar to appreciate to $5.20, Iraq would need to eliminate nearly all existing money supply, trillions of dinars, and peg the new currency at an artificially high rate. That would collapse export competitiveness, trigger import crises, and create chaos in domestic markets. The government and central bank have made no moves suggesting such an approach. In fact, sudden revaluation would destabilize the very economy Iraq has been carefully rebuilding. 4. The Vietnamese Dong. Controlled growth, not sudden spikes. Vietnam's situation is similar. The State Bank of Vietnam, SBV, has long pursued a policy of gradual currency management, balancing appreciation against export competitiveness. Vietnam's economic model depends on manufacturing and exports. Keeping the dong relatively stable helps maintain cost advantages for foreign buyers. Over the past 2 decades, the dong has experienced slow, controlled appreciation, reflecting Vietnam's modernization and stable governance. But a jump from around 25,000 dong per dollar to $3.94 per dong would be beyond comprehension, a change of more than 1,000,000%. Such a move would crush Vietnam's export economy overnight, disrupt trade contracts, and cause catastrophic financial dislocation. The SBV, IMF, and global banking institutions have all reiterated Vietnam's commitment to gradual, predictable currency management. There are no announcements or policy signals indicating any major redenomination or revaluation is coming. Therefore, claims of the dong suddenly being worth multiple US dollars have no economic or institutional basis. 5. Why the screenshots don't add up. Professional currency analysts have examined the viral screenshots closely and found clear signs of inconsistency. The decimal placements, font styles, screen layouts, and data formatting do not match authentic bank systems. Some images show inconsistent currency abbreviations or incorrect spacing, small details that point to digital editing. Additionally, the numbers themselves violate all logical constraints of the global foreign exchange Forex system. The Forex market trades over $7 trillion daily, and all currencies are interconnected. A sudden revaluation of the dinar or dong by hundreds of thousands of percent would instantly disrupt exchange rates across the globe, impact oil prices, and move every major financial index. Yet, none of this has occurred. Furthermore, major regulatory institutions, such as the International Monetary Fund, IMF, World Bank, and Bank for International Settlements, BIS, would have to coordinate on such a monumental shift. There has been no such coordination or announcement. In the absence of verifiable institutional confirmation, these images must be considered inauthentic. 6. Understanding revaluation versus redenomination. Many speculators confuse the terms revaluation and redenomination. A revaluation increases the exchange value of a currency relative to others, usually by government decree. A redenomination, on the other hand, changes the nominal value of the currency by adjusting the number of zeros, for example, making 1,000 old units equal to 1 new unit. If Iraq or Vietnam ever conducts a redenomination, existing holders of physical notes would not become instantly wealthy. Typically, old notes are exchanged for new ones at equivalent real value. It is not a profit-making event. It is an accounting change to simplify transactions. Believing that holding old notes could lead to sudden multi-million-dollar windfalls misunderstands how monetary policy works. 7. The psychology behind viral currency hype. Why do such claims gain so much traction online? Because they feed into a powerful human emotion, hope. Many individuals who invested in physical dinar or dong years ago were influenced by promises of once-in-a-lifetime revaluations. Entire online communities and forums have grown around this belief, reinforcing optimism and dismissing contrary evidence. This creates what psychologists call a confirmation bias loop. People share, like, and repost only the information that supports their desired outcome. As the hype spreads, skepticism fades and excitement replaces analysis. Unfortunately, this makes many investors vulnerable to misinformation, scams, and emotional decision-making. Social media is particularly fertile ground for this. Posts showing alleged bank screens go viral because they look tangible, even if they're fakes. The visual element triggers belief before logic catches up. Add emotionally charged language like "it's finally happening" or "the RV is live," and the viral formula is complete. 8. The practical chaos of a real overnight revaluation. Let's briefly imagine what would actually happen if, hypothetically, these rates were real. Suppose the Iraqi dinar did rise to $5.20 per unit. Millions of people worldwide holding dinar would suddenly find themselves millionaires. The global demand for dinar exchanges would immediately overwhelm banks. Currency exchange counters would shut down under the sheer volume of requests. Governments would have to freeze transactions, limit exchanges, or impose emergency laws to prevent economic collapse. The influx of new paper millionaires would distort asset markets, raise inflation overnight, and destabilize international trade. No central bank or government could sustain such a shock. That's why no country has ever executed an overnight revaluation of this magnitude in modern history. The same logic applies to Vietnam. A $3.94 dong would destroy export competitiveness, bankrupt manufacturing sectors, and trigger widespread unemployment. Such policies would contradict every principle of Vietnam's economic success to date. Simply put, it's not how monetary systems work. 9. Expert consensus: gradual change, not miracles. Economists consistently emphasize that currency values are determined by economic fundamentals, not rumors or screenshots. Inflation control, foreign reserves, government stability, and trade balances are the real forces shaping exchange rates. Both Iraq and Vietnam have made steady progress in these areas, but progress translates into modest yearly gains, not overnight explosions in value. For instance, Iraq's economic reforms and oil exports have helped strengthen the dinar slightly over time. Similarly, Vietnam's manufacturing expansion and stable governance have supported a healthy, gradual dong appreciation. But even in the most optimistic scenarios, appreciation occurs in small percentage increments per year, never by hundreds of thousands of percent. 10. Protecting yourself from currency speculation scams. Unfortunately, viral currency claims often coincide with fraudulent activity. Some promoters use these rumors to sell insider tips, private exchange contracts, or special redemption opportunities. Others push paid newsletters or courses promising access to secret revaluation information. These are classic red flags. Legitimate financial authorities and banks do not sell or pre-announce revaluation opportunities. They do not send email alerts or promote "Get in now" campaigns. If anyone guarantees a future exchange rate or promises guaranteed profits from dinar or dong holdings, they are not being truthful. The U.S. Commodity Futures Trading Commission, CFTC, and other regulators have repeatedly warned consumers against foreign currency scams, particularly those involving the Iraqi dinar. A good rule of thumb: if something sounds too good to be true, it almost certainly is. 11. Smarter ways to gain exposure to emerging economies. For those genuinely interested in benefiting from Iraq's or Vietnam's economic growth, there are safer, more transparent approaches than speculative currency holding. Emerging market ETFs. Investors can gain exposure to developing economies through professionally managed exchange-traded funds that hold diversified assets. Sovereign bond funds. Bonds issued by emerging nations provide interest-based returns without currency revaluation risk. Multinational corporations. Investing in global companies that operate in Iraq or Vietnam can indirectly benefit from those markets' growth without currency speculation. Regional index funds. Broader funds tracking Southeast Asia or the Middle East spread risk across multiple countries. These methods allow investors to participate in economic progress based on real performance rather than unverified rumors. 12. Lessons in financial literacy and critical thinking. This episode is a reminder of the importance of financial literacy in the digital age. Viral content can look convincing but still be false. Understanding how currencies work, how exchange rates are determined, and how central banks operate is vital to avoiding costly mistakes. A strong economy supports a strong currency, not the other way around. A nation's currency cannot appreciate dramatically without corresponding increases in productivity, exports, and capital inflows. Iraq and Vietnam are on paths of steady development, but their growth is measured, not miraculous. Critical thinking means checking official sources first. Reputable media like Reuters, Bloomberg, and the Financial Times. If none of these confirm a revaluation, then it simply isn't happening. 13. The broader impact of false financial claims. False claims like these do more than mislead investors. They erode trust in legitimate financial progress. When individuals invest based on misinformation, disappointment follows, often leading to resentment or conspiracy theories. This creates an ecosystem of confusion and mistrust that harms genuine financial education. Social media platforms amplify this problem. A single fake screenshot can circulate through thousands of groups within hours, reaching millions of people before any fact-checking occurs. The more dramatic the claim, the faster it spreads. In this environment, skepticism and patience are powerful tools. 14. What the absence of official news tells us. In financial reporting, silence from credible institutions often says more than the noise of rumor. If either Iraq or Vietnam had truly revalued their currencies to these extraordinary levels, the global financial system would be reacting immediately. Exchange markets would halt trading, governments would issue emergency statements, and headlines would dominate the news cycle. The complete absence of such responses makes one conclusion unavoidable. These screenshots are not real. The rates shown are inconsistent with every verified data source available worldwide. No market indicators, no IMF releases, and no banking bulletins confirm any of it. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research and consult with a licensed financial advisor before making any financial decisions.